So welcome back to the channel. In today's episode, a bit of a macro update in terms of geopolitical issues going on right now. Plus we're looking at Celsius, Binance and BTC. So here we go, starting here with CoinGecko. As you can see, over the last 24 hours, most things are in the red here. Some things are making slight progress, but quite a few things are down. But generally across the market, we're down a few percent. So Bitcoin has been teetering towards 21,000 over the last day or so, but it was rejected 3 days back now at around 22.5k. This coincided with the 200-week moving average. And since that rejection took place, it has been grinding slowly lower. Whether or not we're working on a higher low right now, though, which could be a positive signal, is yet to be determined. So we will continue to monitor this and see how things change. But across the altcoin landscape, most things are pretty much flat or slightly down today. So this from Rect Capital here, he's showing that Bitcoin has weekly close below the 200 weekly moving average, the amber line on the screen here, for the fourth consecutive week. So this is rather bearish indeed. And as you can see, we've also got a red weekly close there after the weekly finished yesterday. And so this is obviously bear, bear, bear. If we also go over to here and look at the downtrend in terms of the weekly close, once again, we are printing lower highs, but we are on declining volume here. There is an anomaly in the volume, which we'll talk about next. But as you can see from that, that is kind of bearish. But if you do look at the wicks, there are higher lows in here thus far. Depending on how things map out over the course of this week, we'll see if we're starting to work into a bit of a slight chance of an uptrend here. But in terms of volume, there was a huge surge in volume traded over on the BTC markets at Binance. Now, this was due to the fact CZ of Binance announced zero trading fees for Bitcoin spot markets. And what happened as a result? Huge wash trading did take place. This is due to a lot of VIP incentives that Binance has for big accounts. So if you trade huge volume, you get discounts on your maker fees and taker fees. And thus, this is very profitable for individuals who are trading with big size, as even just a few bips difference on the trading fees over the course of a year for some of these accounts, it's millions of dollars. So this is what Fellow Fox posted the other day. Huge volume coming in here on the exchanges, massive green candles. Holy cannoli, he says, about 3 billion worth of Bitcoin bought in the last 2 hours or so, he thinks. So what's going on for this? What underpins this? There was obviously those memes going around as Bitcoin was pushing here towards 22k that the Saudis were buying, and there was all these memes around the Saudis, even an NFT collection called the Saudis being spun up. Well, this is what CZ says. We think this is due to zero fees and people trying to gain VIP tiers on Binance. We will exclude BTC trading from the VIP calculations and remove all incentives to wash trade. Announcements with details coming shortly. So this was the Binance VIP tiers. You've got to trade over $1 million BUSD in the last 30 days on spot markets, and for futures over 15 million BUSD. And as you can see from here on the spot trades, the maker fees and taker fees, the more you spend, the more you play, the VIP tiers, the bigger the taker fees get reduced, and also the maker fees as well. So as you can see, it was gamified, the system, and now this has probably screwed up quite a lot of the volume data that individuals have been tracking for last week now. On to more Binance news. So this was just posted by Walter Bloomberg here, and this is a Reuters post. Binance served crypto traders in Iran for years despite US sanctions. So this is quite a strange one due to the fact, of course, Binance is a non-US business, posted out, I think, in the Bahamas now. Essentially, they have their own arm, Binance US, but this for me is maybe underpinning something a bit more and saying a little bit about, where the US might fall in terms of where it's going to allow people to trade in the future. So I think this is bearish for Binance in the US generally, and probably bullish for FTX And this, for me, may be the signs that we're going to have sides being taken in terms of the crypto exchanges. And if you go back to this article from November of 2020, cryptocurrency CEO donated second largest amount to Joe Biden's campaign. That, of course, Sam Bankman-Fried, CEO of FTX. So when I see the kind of bearish headlines, US specifically portraying Binance negatively. Look, these guys were helping Iranians buy cryptocurrency as if it's the US's business. We don't like this. This is essentially what this article is saying. So tinfoil hat time, but I do think there's going to be, a bit of a carving up. What areas Binance will dominate in geographically and what areas will FTX dominate in going forward. And I think FTX is going to be handed the US market on a plate, just my humble opinion. Now, next up here, Celsius has hired a new legal firm to assist on their restructuring. Now, this is a strange one. This article here is kind of suggesting that this is maybe even positive for Celsius. Cryptocurrency lender Celsius is trying to overcome the hypothermia caused by the crypto winter and position itself as a reliable service on the market to gain its credibility once more. I think this is way too far gone at this point. But Celsius has hired law firm Kirkland & Ellis to advise on its restructuring. The law firm joins the crypto lender 1 month after it hired another firm. This is pretty negative in my opinion. The fact that Gump, Strauss, Hire and Fells have been relinquished of their duties after just 1 month and they've brought in a new firm suggests that these guys maybe wanted to do it in certain ways and the CEO and the board have decided we don't want to do it that way. Let's bring in the guys who are going to give us the yes to what we want to do. That's just my opinion on this. The article here says that restructuring is a court-approved plan in which a company recognizes to pay its creditors within its means. So parcel payments, board changes, mergers and acquisition processes, transfers of rights and other solutions may be considered here. Now this all goes back to the halting of the withdrawals. Back when this was posted, what was that? June 13th, the pausing of all withdrawals, swaps, transfers, etc. And the main crux of this was around ETH 2.0 with staked ETH. Celsius has huge positions in staked ETH. And if too many people were trying to withdraw Ethereum, it couldn't really be done. They didn't have the actual liquid Ethereum on hand. So staked ETH was kind of the first pin to drop here. And if we actually look around the 13th of June here on the staked ETH chart, this kind of region, this is where it was depegging quite badly, down to around 0.93, even to a low of 0.92. This is kind of that Celsius FUD period here. But staked ETH has since recovered quite a bit here. But it's quite evident now that this is not the only problem for Celsius. So if we just go over to this post here that Light posted earlier, this reiterates the news of the new law firm. And if you can see at the bottom of this post, Kirkland & Ellis also serves as restructuring counsel for crypto broker and lender Voyager Digital, which filed for Chapter 11 protection last week. And in the court papers, Voyager said it faced increasing requests for withdrawals from customers after Celsius froze user accounts. So it seems the same firm that has worked with Voyager here, maybe we're going to get the same treatment here for Celsius and Chapter 11 being announced soon. Now this is also another update on the situation. Wrap BTC and ETH from Celsius wallet going into FTX. Stablecoins later coming out of FTX to pay down DeFi loans. As Light says, what could these Bitcoin and ETH holdings be if not customer deposits? So this suggesting that they are selling off the Bitcoin on FTX and then getting stablecoins out to repay debts. And this could be one of the reasons why we're seeing Bitcoin's price going down, if this is the reason. But there's also a few other reasons it could be, of course. We don't know. It's very opaque right now. DeFi chimes in and like clockwork, 75 mil out. As you can see here, you can see the transactions. Celsius's FTX account, they withdrew $50 million, $10 million, $20 million, and $75 million over the past few days, with cryptocurrency going in the opposite direction. So it would seem that they are selling, but one possible theory is the fact that they are putting collateral onto FTX, and maybe FTX are giving them some line of credit to take stablecoins out against those crypto deposits. That is an option that is on the table here, but certainly looking quite bearish right now, and the longer the silence continues from Celsius directly, the worse for everyone involved here. Then in terms of bank runs, over to China, China bank run fears intensify as violent clashes break out over this weekend. So this past weekend, there have been numerous clashes, and I'm sure you've seen the videos doing the round over on Twitter, but Asian Markets here has reported and verified video and images from Chinese social media platforms, Weibo and WeChat, showing violent clashes between police and depositors who have been unable to withdraw funds. So much like the cryptocurrency space, now in real life, you're seeing this as a problem over in China. And Asian Markets actually revealed there's 6 banks across the Henan and Anhui provinces which have effectively frozen deposits. So this is obviously very, very bad geopolitical times around the globe. And you can see some of the riots and issues going on here outside one of those banks. So this seems to be a confirmed report at this stage. So geopolitics, very, very bearish right now. You're seeing unrest in Sri Lanka, Netherlands, China, and potentially a huge spanner in the works here for Europe is this. So this is something that is quite concerning right now. Nord Stream pipeline begins annual maintenance, with Europe concerned a shutdown could be extended. So the Nord Stream pipeline is the natural gas pipeline, and it says the biggest single pipeline carrying Russian gas to Germany. We've already seen Germany has, for the first time in like 30 odd years, posted a trade deficit. It's a known massive powerhouse in Europe, one of the biggest exporters. They had a trade deficit this year. So this is starting the Nord Stream pipeline. Its annual maintenance today. However, the scheduled time for this maintenance is typically 10 to 12 days, but some European governments, markets and companies worry that the shutdown might be extended. So the ball is really in the Russians' court here. The Nord Stream pipeline transports 55 billion cubic meters a year of gas from Russia to Germany under the Baltic Sea. Russia cut the flows to 40% of the pipeline's total capacity over the last month, cited delays in the return of equipment being serviced in Canada. So some level of fuckery here. German Economy Minister Robert Habeck says this: based on what we've seen and the patterns we've seen with Russia, it would not be surprising now if some small technical detail is found and they could just say, oh, now we can't turn it on anymore, he said in an event at the end of June. This is very, very bad. Going into, over the next few months, cooler times and then eventually winter in Europe, the amount of reliance on these natural gas resources can't be understated. It already looks like an altcoin chart, does the natural gas costs in Germany, but this will continue to exacerbate. And if they don't have that pipeline turned on, there's going to be huge shortages, possible mad issues, to be honest with you. So this was Peter Zeihan, one of the geopolitic experts. I was listening to one of his podcasts earlier today for a good few hours. Quite disturbing stuff, to be honest with you. But this is a Doomberg tweet that I'll leave down below about natural gas. This is a really good thread. It's down below if you give it a read. But he says, replying to this, what he said: I'll just add that with the imminent disruption of Russian natural gas exports to Germany, we are looking at the end of the German manufacturing model, perhaps this year. So the level of geopolitical uncertainty and issues out there right now is crazy. I know everyone's very much doom and gloom about markets due to this fact, but there's serious issues out there. So crypto rallies, in my opinion, are still to be faded. I think we're at best going to continue grinding down slowly lower. But with this macro backdrop, this is something we haven't previously faced in crypto markets. So looking pretty bearish out there, folks. Anyway, I hope you enjoyed this one. If you did, question of the day for you down below. Check it out. I will see you guys in my next video. Subscribe if you're new. Goodbye.